Hi, this is Chris Buss with Traders Profit Compass with a post FOMC analysis of the SPDR ETF complex. It is Friday, June 18th, about 10 minutes before 9 as I start the video. This is a follow-up to a pre-FOMC video I did the other day heading into the FOMC announcement, and really the idea behind the analysis of the SPDR sectors is simply to identify the sectors that are going in and out of favor post FOMC. So let me go through these rather quickly here. Materials. We talked about using the 50 as a key level on materials. We got the breakdown, came down and tagged 81, which was our first technical target on a breakdown. I think that's the level that you key off of today and in the days ahead. I wouldn't be surprised if we come down, back to 81 here. We've got pre-market weakness here on Friday. Quad witching. I wouldn't be surprised even if we undercut 81. I wouldn't be too, if you're in the trade already, that's great. You caught it. You're winning. Ride the trade as long as you can. But for now, at 81, I want to take a wait and see attitude. That would be a logical place for a bounce. But if we get that bounce, and then, next week or the days ahead, whenever you see 81 break and you're not in the trade, I think you get in the trade there, and then you look for 79 because the route might be on at that point for a move back to the 200. And you can see how extended we are on this big move in materials. So I would use 81 as your pivot going forward on materials. Communications, Facebook and Google proxy, 44%. We were down a little bit on the FOMC day and then up a little bit yesterday. Sitting here on the 20, I don't think you do anything here. Facebook and Google have been strong, and if they try to reverse this trade and take it down, I think you key off a 77 and the 50. I don't think this is worth trying to short or really do anything here. And if they take it higher and take out the previous high, I think you want to get long XLC. And if you prefer, you'll probably see Google and Facebook breaking out. You could play those directly, or if you prefer in XLC, that would be a confirming factor that they're taking technology higher. Energy got destroyed yesterday, down about 3%. We had talked about this divergent high here. Negative divergence on RSI, negative divergence on PPO, yet price at the highs. We have violated this intermediate trend line I had here. So if you took that short yesterday, you're in perfect shape because there's weakness here this morning. I think oil was down, 1% at least that I saw. Look for a move down to the 50, right around 52. And then for others, if we gap down this morning, I wouldn't be trying to get in that trade. The 50 is going to be a logical bounce point. But if this whole thing falls apart with energy and commodities and the reflation trade, and they take oil down, you're going to see a break of 52. And that's where I would hit it if you're not in it already. Give up these couple bucks here today because you're not going to be able to, if it gaps down, you're going to be late to the party. What I'd rather see you do is let price come into the 50, put in whatever kind of meager bounce it wants to do. And then when you break 52, you hit it, because you break 52, here comes 47.50. And I think that would be a great trade. then you can shoot against the 50 and this big volume over price bar here, and then you've got some meat on the bones to come down, but not today. I think if you're in it today, you play it for all it's worth into 52, and then you can either cover or wait and see, but you'll already have a nice winner on your hands. Financials got killed yesterday, 3%. We had talked about this 37 level as being important. We talked about price being pinched between the 8 and 20, this lateral support, and the 50. If you got short on a break of the 50, or even on a break of 37, you're in the driver's seat. That trade is set to go further down today, and then your next level is 35.50. If that breaks, going down to 34. But as rates sink lower, they're lower again this morning. If rates sink lower and they hammer these cyclicals, financials, industrials, the reopening trade further, you're going to see a move to 35.5. And then if you see a break there, then you got another $1.50 a downside. Of course, if you choose to trade individual boats on this tide, JP Morgan, Citibank has been down 12 days in a row. Come on. Bank of America, all that kind of stuff. KRE, regional banks are probably the most direct play on rates in the banking sector. Why? They don't have the capital markets. They don't have M&A, that kind of stuff. So trading, the regionals don't have that. So if you look at KeyCorp, PNC Financial, Truist, all those names like that, Zion is another name. But you can play the KRE Regional Banking Index to get a direct play on rates. So I see this next move down to 35.5, and then that'll be your first technical target, with 34 being the second target. XLI hammered as well. As we discussed the other day, the break of the 50 was your key to get short. Now your technical target is 97.50. I would stay in that trade. If you're not in it and you see a kickback to 102 or something close to that, then I think you can hit it, because there's going to be, I don't think we go right down to 97 in a straight line. There's going to be a time where, there's some kickback strength, and you'll get a green day or two. And then if you get a move back up towards 202 and it stalls, 102 and it stalls, back at the 50, you hit it. And then I think you go down to 97.5. And if it pops back above the 50, you got to kill the trade. But I think that's your key pivot right there at 102. Technology, strong day yesterday, right at resistance, 143.5, 144. I think that's your pivot. If we break out, you get long there. I'm not interested, and I don't think you should be either, with any kind of a short there at 143. Why? You've got all these moving averages moving up. Those are going to be support levels on the way back down. I think that's a tough trade. You could just, kind of die on the vine with price chopping around in this area. What would change my mind? Break of the 50 and the break of this generous uptrend line off of this November low. You break 138, you break the 50, then I think you got to move down to 132. And I think that is your higher probability short versus messing around in here. So on the high side, you break 144, get long. On the low side, break 138, get short. Staples, really not my thing, but they're going to move inversely to rates. So this nasty candle here was rates rising sharply. That works against staples. yesterday you saw them fall and you got a green candle. So I think you can either use the 50 as a pivot point, or down here at 69.50 or 70.50. If you reclaim 70.50 or reclaim the 50, I think you can get long and come up here and go higher if rates are going to continue to fall. That should be supportive of staples. Very much the same comments on utilities. These are yield plays, and if yields are going up, that's a negative for utilities. That was the Fed day. Sharp yield bump cratered utilities yesterday. They fell back. So use 65.5 as your pivot point. And if you see yields continuing to fall, that should be supportive of, if you see rates continue to fall, that should be supportive of XLU. And you can see the big pivot here at 65.5. XLB, somewhat defensive, right here at the top. Same comments apply. Very much like technology from the standpoint of you get a breakout above 125.5, 126, get long. But if you see a breakdown below this intermediate trend line, then you can try a short, come back here to 121 and possibly 119 at the bottom of this big trend line. And if you're not a guy that shorts or don't care to play it, that would be your objective long. If there was a pullback into this trend line here at 119 with lateral support at 118, that's where you take your long and you give it a shot for a bounce back up. But you lose 118. I don't want to get too dramatic, but it's over. You're going to come down here to the 200, and there's probably all hell breaking loose. So then your first stop would be the 200 at 114.5. And then if that breaks, you're coming all the way back to 110. XLY remains a very interesting setup. Why? Because there's this ascending triangle against 173, 173.50. 173 is your number. You break out above 173, get long. A lot of energy here. You've got all the moving averages coiled, ready to be support on a breakout. And by the same token, if they bury it, if they break this big trend line, then all your moving averages will be above price and therefore be resistance. This is either a long or a short that you want to be in, because I think it has the potential for being a very powerful move because of the energy in this triangle and because of the positioning of the EMAs. So you break down 171, get short. You break out 173.50, get long. And I think it'll be a dynamic trade in either direction. So that's just a quick update here in the pre-market on June 18th, quad witching day. Be ready for some volatility. I have no idea which way this thing is going to break, but I know there's been a lot of weakness pre-market. That's going to leave a big gap above on the indexes and probably a lot of individual names as well. Be careful out there on the whipsaws. If super active trading is not your thing, step aside, let the dust settle. The market will be there Monday, and we can pick up the ball then. If you're an active trader, respect those stops, and that's your protection. Take a paper cut, swallow your pride, get out of the trade if it's wrong, go the other way if you like, but you got to respect those stops, or else you got nothing on a volatile day like today. So let's wrap it up here. This has been Chris Butts with Traders Profit Compass. Good luck today. Talk to you next time.